Good morning, everyone, and welcome to today's special webinar on budget cycles. So budgeting is one of the most important activities in FP&A. Typically, what happens is that just before the start of the next financial year, you have to start preparing the budget, right? So your budget is like a blueprint of how your income statement, your balance sheet is going to look like for the next financial year. So what would be your estimated revenue? Where will it come from? And what will be your estimated costs? What are the kind of profits that you are looking at? Your estimate will then be translated into an income statement or an estimated or a budgeted income statement, which then goes to the board and it's approved. So today, what we are going to discuss is what does that entire cycle look like? How much time will it take? What are the steps involved in the entire budgeting cycle? So that will be our main focus for today. So just a quick poll before we begin with. How many of you have worked in your companies on preparing a budget for the next financial year? Yeah. Preparing a budget for the next financial year. Just type your responses in the chat box as yes or me or whatever suits. So how many of you have worked on preparing a company budget in your respective roles or companies that you've worked with? Okay, I can see one yes in the chat box. Not for the entire company, but for the branch. Okay, yes, I have prepared the budget. Okay, fantastic. Okay, so most of you are new to the budgeting cycle, and some of you may have seen it in some form or the other. Maybe you might have prepared some steps in the budget. Maybe you're prepared for a branch. Maybe you're prepared for your entire company, depending on how on the size, scale, and operations of your company. So today, what we'll be doing is we'll get into understanding how does a typical budget cycle operate in a large multinational. How much time does it take? What are the steps involved? Who are the stakeholders? And how is it going to help you to execute the budget and some of the best practices around that, right? So that will be our focus for today. So just a quick introduction to begin with. My name is Dhawal Parvatikar. I'm a qualified chartered accountant. I've also completed my one-year executive management program from IIM Ahmedabad. Over the last 16 years, I've worked as CFO in India and in the Middle East in various sectors like oil and gas, software, advertising and communications, also a part of a commodity trading company. I'm now the co-founder at FP&A Professionals Institute. Both Asif and I quit our jobs last year, and we have started this training institute where we are now extremely passionate about helping finance professionals upskill themselves. And also, we have been training since quite some time. Over the last 5 years, I've trained more than 5,000 professionals on various topics like finance business partnering, FP&A, data storytelling, leadership, and CFO coaching. That's what my background has been. I've also had the privilege of the last 12 to 18 months being part of more than 10 CFO events. Somewhere I've gone in as a solo speaker, somewhere I've gone in as a panelist, as a moderator, and I was fortunate enough to build a CFO community of 200 plus CFOs across India and the Middle East. So that's what a little bit about my background. I'm extremely happy to have joined by my co-founder Asif Masani here. So Asif, I'll let you introduce yourself.
Thanks, Dhawal. Quick intro about me. I have also been working in for over a decade now, and most of my experience has been working with banks, pharma companies, and edtech companies. Most recently, I was FP&A lead for Coursera at FP&A India and APAC lead for Coursera, which is while we went and got into FPI. So last couple of years, I've been working with working on FPI as a co-founder, lead faculty, and I've written a couple of books on FP&A. So the two books that you see on the top right, and both of them have been Amazon bestsellers for a couple of months while they were launched initially. So that's a little bit about me. Happy to partner with Dhawal. And also, while we have done that in the last few years, I have got the opportunity to meet FP&A experts across the globe, anywhere from North America, Europe to Middle East. So I have had the opportunity to meet them, interview them, and get insights, which we try to bring in our content, be it our books, podcasts, or courses and certifications. So that's a little bit about me, and I'll also take a minute to talk about FPI. So as you can see on the screen, me and Dhawal met somewhere in 2022. Dhawal had a Udemy course, which is a very popular FP&A course, FP&A Foundations. More than 2,000 people had taken that course by then, and my first book had also got good response. All about it. That's when we decided to come together and start our first live 4 weeks FP&A program, which is FP&A Masterclass. We started with 25 students in September 2022, and by now we've done almost one cohort every 2 months. So we've done 18 cohorts, 450 plus students have taken the live FP&A masterclass. With that, we decided, okay, this is something which we are passionate about and we like doing, and we got into this full time in 2023. I quit my job in November of 2023 and set up FP&A Professionals Institute, which was FP&A Professionals earlier, and we started building more certifications which were requested by people who completed all these certifications that you see we built in the last couple of years. And the most flagship certification is the 6 month in-depth CGFPA certified global FP&A professional, which took us 6 to 8 months to build after we quit our jobs. And that is something that we will talk about more in the later part of the webinar today. Overall, we have trained more than 3,500 students across all of these certifications that you see on the screen. So with that, we'll get into the topic today. So we'll talk about the today's topic, which is a budgeting cycle. And before we get into the topic, I'll just give you a quick overview of what you will see in the next 35 to 45 minutes. And then we'll also do quick Q&A. Some of you have already worked in the budget, so you might have questions. So we want to make it interactive. So we'll spend maybe 30-40 minutes on the entire webinar, and then we will take questions. So we start with the what and why of budgeting. What is budgeting? Why is it important? Why do companies still spend 2 months doing a budget in spite of being so time consuming? What are the different parts or different phases of a budget cycle? So right from the planning stage to execution to consolidation and reviews. We will talk about each and every stage, what happens inside each of these stages. We'll also take a look at a budget example or a template, which will give you an idea of how it looks like in practical life. So that is our agenda for today. So what I would suggest you to do is keep your phones on silent, pay attention for the next 30 to 40 minutes, and be very attentive and take the maximum benefit of this webinar. So we'll start with what is FP&A. So some of you are maybe new to FP&A. So what we like to do is define FP&A in the shortest possible in the best possible way. So FP&A is a team that helps the business make decisions, and what it does is it acts as a bridge between the functional and the business teams like sales, marketing, product engineering. So all those are functional teams that you see on the left hand side, and it acts as a bridge by collecting input data from those teams and then refining that, providing, supplying in meaningful information, meaningful reports, meaningful insights that are required for decision making for the senior management on the right. So senior management includes your CEO and all the people who are reporting to CEO, your sales head, marketing head, CFO, all those people are one down CEO. So FP&A team acts as a mediator or the bridge between the business and the functional team and the senior leadership.
When it comes to when it comes to FP&A, there are four key functions that FP&A executes. One of them is budgeting, forecasting, and then under management reporting, you have variance analysis and profitability analysis. So while budgeting is your annual business plan, forecasting is all about tracking the performance of the business during the financial year, which means let's say we have completed Q1 of actuals, then you do something called as a 3+9 forecast, which is actually 3 months of actuals and 9 months of estimates. So that's the forecasting cycle. And depending on the size and structure of the company, you will either do it on a monthly basis or on a quarterly basis. And then you send a lot of management reports and reporting packs to your senior management to take some decisions. To execute these management reporting packs, you'll either end up doing a variance analysis, that is comparing different numbers like actual versus budget, actual versus forecast, current year versus previous year, all these different kind of comparisons, and trying to ascertain reasons, business reasons as to why there has been a variance. Right? And then you fill that to the management to say, okay, this has been the variance, so this is the decision that we need to take to plug the variance, or what can be done about it. And then comes profitability analysis. Many companies are structured in different formats. Like some of them could be structured branch-wise, region-wise, product level, strategic business units. So whatever is the structure, each of these subcomponents, you try and prepare a profitability at that level. For example, let's say a business unit profitability or a regional profitability or product level profitability, client profitability, and try and help the business deconstruct where the profit is coming from, and then improve that subcomponent of the business to improve the overall profitability of the company. So that is profitability analysis. Both again, variance analysis and profitability analysis are your techniques used while compiling your management reports. So once you understand these key four functions, so today's focus will be on the budgeting function, where typically FP&A teams spend anywhere between 2 to 3 months in a financial year compiling the budget, executing it, making it reasonable. So that's the focus for today. So we look at how a typical FP&A month looks like. So apart from budgeting, what are some of the activities that FP&A teams carry out? So a typical FP&A month will kind of give you a quick overview of what is the BAU, what happens on a month-on-month basis in the FP&A function, and then we move into the budgeting cycle, which typically takes anywhere between 2 to 3 months during the financial year.
Okay,
Asif?
you can bring all the. Okay, so before we get into the budgeting cycle, quick look at what are the usual month-on-month activities laid down by week one, week two, week three. So, for example, this is first week of May. So, what FP&A teams will be doing in week one of May, second week of May, third week of May, and last week of May. So, a quick overview of that, and then how that connects to the budget cycle that we will take a look in the next few minutes. Okay, so usually, typically, a month starts and most companies close their books anywhere between the third day of the month to the seventh day of the month. That is average. Some companies might be doing it earlier, some might be doing it later. But on an average, between the third to the seventh day is when the most companies close their accounts and have their previous month numbers ready. What the senior management will want is they would want the estimate of the previous month even before the books are closed. So what FP&A team does is at the end of the month, say for example in our case, end of April, they'll start preparing flash reports which will give the senior management estimate of what the revenues, expenses, and profits would look like for the month of April, even before the books are closed. So that is the purpose of flash reporting. It helps you to give an estimate before the books of accounts are closed. Also, it acts as a bridge between your month-end reports. So sometimes teams may want to track certain numbers, certain KPIs on a weekly or a daily basis. So flash reports are reports that can help you do that. Okay. So that is what people do in the first week of the month. And then once the books are closed, they can prepare their management reports and the month-end reports and the quarter-end reports and then send it to the different business teams for their review and decision making. That is week one. Week one is more or less reporting. Week two is forecast update. So you pick up the previous version of the forecast, update the forecast, get it reviewed, and then log the forecast for the next reporting cycle. So that is week two. Week three is once you've completed reporting and forecasting in week one, week two, you spend some time on analysis, some ad hoc projects which you could not pay attention during week one, week two. A lot of teams also spend time in automation. Once you've submitted the forecast in week two, you also need to keep an eye on risk and opportunities, any risk or any opportunities that you see that could affect your forecast that you had submitted in the previous week. So that is more or less weekly, and week four again is preparation for week one. Most teams would spend time in preparing for the week one and two, so they would be more or less spending time rolling forward the reports so that they don't have to do that in week one when the reports have to be sent. So making sure that all the preparation work or the background work is done for week one and week two, and that is how the monthly cycle looks like, and this continues every month. Okay. One thing you might have noticed in this is that there is no budget mentioned in the year. That is because budgeting is not a monthly or a weekly activity. It is annual activity. It happens only once during a year, and typically it starts 2 to 3 months or 4 months ahead of the new financial year. So, for example, if your financial year is your January to December, then most of the teams would be preparing the budget anywhere between August, September, October, November. So typically 4 months before the financial year starts. Okay. So this is a typical weekly, monthly FP&A calendar. You don't have budgeting in here because it's not a weekly or a monthly activity. It is a once in a year activity. So it has a separate calendar. So we'll now go and take a look at the budget cycle.
Asif, I'll stop sharing my screen. You can share it, right?
Yeah, I'll share it. Let me know once you see it.
Yes, not
Yeah,
in slideshow mode yet. Yeah.
yeah. But before we get into budgeting, let's hear from Dhawal what he has to say about what is budgeting and why is budgeting important.
Sure. So every company has a certain vision, right? And this vision could be that, let's say, for example, you're at the end of 2024, and by 2030, you want to double the turnover or triple the profits or enter four more geographies, increase the headcount by 1K. So whatever the vision of the company is, it will remain a wish if it is not translated into an annual actionable plan. So that is where the annual business plan or the budgeting exercise comes into play, where you are engaging in meaningful discussions with the entire leadership so that you are able to prepare an estimated revenue, estimated costs, and operating profit for the next financial year, so that becomes your blueprint. That becomes your direction that, okay, If we keep going on this path, then we are able to achieve our numbers, our metrics, our vision, and that translates into the annual business plan or the budget. Asa, we can just click one more time. So it is also called with different names. Like sometimes it is called as commitment, sometimes it is called as a target, a plan. All these mean the same thing. That is basically your budgeted P&L or budgeted revenue, costs, and operating profit for the next financial year.
Okay. Now, before we get into the budget cycle, we wanted to quickly share one key concept of what is. So let me ask you this: do you understand? So a lot of people messaged that they have already worked in the budget on the budget. So for those people who have already worked, what is the difference between top-down and bottom-up budget? So can you just type that in the chat box? Okay, what do you mean by top-down budget and what do you mean by bottoms-up budget and what is the difference between the two? Okay, I'll give it maybe 15 seconds and then if not, I can cover it. Okay, especially people who have worked in the budget, they might be knowing about this. Okay, so let me then talk about it. So your top-down budget is something that is directed by senior management. So senior management will tell you, okay, I want you to do 20% more revenues than last year without any inputs collected or without any buy-in from the sales team in this case. Okay, so it is more of a top-down direction that is you are getting from the sales from the senior management, and bottoms up is as somebody put down here. Okay, so I see now few messages. So Mohammed is saying that Vaishali is saying top down start from top management, like directly we take data and communication from CFO. Okay, top down is from higher management. Bottom up is from participation from all the department heads. Absolutely, bottoms up all team members and departments. Right, mostly we have bottom up budget in our organization prepared in the budget level, communicate to the top management. But what happens ultimately is always a top down, which is giving unrealizable targets, right? So there's always this negotiation that happens. So you will have some expectation from the senior management, which is top down. They might say, okay, we need to grow revenues by 20%. And then you also collect in as an FP&A team, you will also collect inputs and prepare the bottoms up budget, which is collecting data and collecting information, asking the teams what they can deliver in the next year. And say after you do that for a month or so by collecting the inputs, you figure out that everything adds up to only 12%. Okay, so there is a gap between 20% and 12%. That is where negotiation happens between the senior management and the business teams, and FP&A teams is the bridge which helps in mediating or negotiating that, and eventually somewhere in the middle they would agree and reach the budget for the next year. Okay, so that is top down versus bottom up budgeting. So what we will be discussing now onwards in the budget cycle is about bottoms up budgeting. So top down budgeting is very straightforward. It is just a direction by the senior management, and they may do it based on certain logic or certain calculations. But what we will be covering in the budget cycle from now, from next slide onwards, is bottoms up budgeting. So that is what why we wanted to clarify the difference. So we'll talk about bottoms up budgeting, which is actually what the departments want and they want to deliver in the next financial year, and FP&A teams will collect all that inputs and present to the senior management. Okay, so the bottoms up budgeting cycle will look something like this in most organizations. So you will have three different phases, and we will go into each and every phase in detail in the next few minutes. But just a quick overview. The first stage is the planning stage, the second is the execution, and the third is the consolidation and reviews. Okay, we'll now go into each of these phases one by one. Okay, so let's start with the planning stage. So what happens in the planning stage are critically two activities, two important activities. The first one is the budget timeline and the calendar. So you prepare the timeline of what will be the different activities and who will be the different people getting involved in the budgeting process, because it's a long 2 to 3 month process in most companies, and without a proper management or without a proper calendar timeline, it will be difficult for you to manage the entire project, which is a 2 to 3 month project. So budget timeline is an important part of the planning stage, and also the second important part is the budget guidelines. So what are the rules and regulations that everybody who's working on the budget need to follow so that everything happens in a smooth manner. Imagine there are no rules or no regulations, then everybody in different departments will act and will submit your budget numbers in different ways, and it will be extremely difficult for FP&A teams to be able to work with those numbers. So budget calendar and budget timelines are the two important activities in the planning phase. We'll start with the budget guidelines. So what are budget guidelines? As I mentioned, it are some of the rules and regulations that the team will set expectations from different teams that they need to follow these rules and regulations. And also this gives the business teams and the function teams who are providing input some guidelines so that they provide good quality data. They are not providing, first of all, they're providing data that is expected, and also it answered some of the questions that they may come up with during the budgeting process. So what I will do is I will share a few examples from my experience of the budgeting guidelines. So keep this in mind. These are not okay. These may not be applicable to your organization. What this could do is this could give you some ideas of how you can build guidelines for your for your particular industry or for your particular company. However, you cannot just take these guidelines and apply it in your company. So keep that in mind. These are just some examples that I have seen in my experience in working in FP&A for the last 8 to 10 years. And some of them are also common. Some of them you can adopt, but don't blindly take it. Apply your mind and see if these are applicable in your organization. Okay, so let me talk about few of them. So first example, again, these are examples. Budget should be submitted using the provided templates only. So most cases, FP&A teams will create standardized templates meaning same templates for different business units, for different teams, so that when they collect the feedback or when they collect the inputs, it's easy for the FP&A teams to just upload that in the system or the tool, and everything in terms of the consolidation and the version control happens in the budgeting tool. Okay, so those templates are defined and they are engineered in a way that once the templates are received back, it should just be at a click of a button that everything is uploaded in the tool and everything from different departments get consolidated either in a tool or it could be manually in Excel as well. However, standardized templates could be one guideline that could be there as a part of your budget guidelines. Okay. Another example could be detailed justification must be provided for any variations from the previous year budget. Okay. This is again a very common guideline, especially when you are doing incremental budgeting. So when you are doing incremental budgeting, which means so that everybody is on the same page, I'll just quickly define incremental budgeting. So incremental budgeting is when you are taking the previous year budget number or the actual number, and then you're giving a certain percentage increase over that for your next year's budget. So for example, you had spent 100 rupees in the last year and you want to define the budget for this year. In the case of incremental budgeting, you will say, okay, last year you had 100 rupees. This year the inflation is 5%. So let me give you 105 rupees this year for the same thing. Okay, that is could be one example. So in that case, you need to provide some justification that if there are significant changes from the previous year budget that you are asking for, then you should give some detailed explanation for that. That could be one of the guidelines. Okay. Another guideline could be any adjustments to the budget after the submission must be approved by somebody in the organization. Okay. So what happens many times is the teams will submit the templates, and then after 2 days they will come back and say, no, no, there is some changes. I need to readjust the template. I need to. So imagine all of the there are 25 departments in the company and all of them do that. They send you the template and after a few hours or after a few days they tell you, okay, there are changes. I need to resubmit it. So it will be a chaos, right? So you typically regulate that. You tell them, okay, you have to submit the first version of the template by the 25th of May, and that will be the first version, and you cannot make any changes till 15th of June. Okay, any changes that you want to make, I'll again ask you for another version on 15th of June. So you submit that on 15th of June only. So if they want to make any changes, they can't do in between that. And if they want to do that for some review in between that happens, they have to take somebody's approval so that it is regulated and not everybody will misuse that. Okay, I'll not cover all the guidelines. These are just some examples that I'll bring up on the screen. And to give you an idea of how you can build this for your organization. Again, you cannot just copy paste this in your organization. You have to make sure that these are making sense for you and your team. Okay, so I'll not cover all the guidelines. I'll just bring that up. You can read it, and we will move to the next part in maybe 5 seconds. Okay, maybe I'll just add one more. Okay, so what happens in many companies is once the period is over, you have to decide whether you have to allow them to carry forward that unused budget if there is any unutilized budget in the next period. Okay, so you could have a rule for that. Okay, a rule could be, I mean, this is again an example. Uh, you could allow carry forward from month on month But once the quarter is over, any unutilized budget will be sent back to the corporate, and you will not be able to use that budget in the next quarter. So month on month carry forward is allowed, but once the quarter is over, you cannot carry it forward to the next quarter. Again, this is a specific example. You could do it differently. You could say month on month is also not allowed, or quarter on quarter is also allowed, based on how you want to apply in your organization. Another one is ensure that the phasing of the expenses are right. A lot of teams will submit the full year numbers, and then they will just do divide by 12 or divide by 4 for the 4 quarters or the 12 months. They will not give you the right phasing or right monthly numbers for the expenses. So you have to also ask them to give you the right monthly breakup of the annual number. So these are some examples of guidelines. Okay, I'll just take a look at the chat box. So Anirban is saying budget used or unused can be guidance for the next year, same quarter. Can this be played by the corporate FP&A? I am not sure if I understood the question right. So next year, definitely you cannot carry forward. So any unutilized budget for the next, if you don't use it in the in the full year, in 99.9% of the cases, you don't get that in the next financial year, but you could get that in the next month or the next quarter depending on how you set up the rules and regulations. How do you differentiate between data collection, cost center, and profit center budget? Okay, so when you are creating your templates, we will take a look at some examples of templates. In that, you have to include all of these fields wherever they are applicable. Okay, so when you're collecting data through templates, and you know there are cost centers for if you're collecting cost information, and that has to be cost center specific. So if the company is set up cost center wise, the departments are set up cost center wise, you could have separate templates for different cost centers and then consolidate all the templates together. Okay, same goes for the profit center. All right, so we talked about budget guidelines. Next comes the second part of the planning stage. We talked about the planning stage. It has two different parts. One is the budget calendar and the budget guidelines. So these are the budget guidelines example, and the next will be budget calendar. Okay, so think of budget calendar like any important life event, or say for example any exam that you're giving, important exam you're giving. So if you recollect when you were in your 10th standard, 12th standard, or you were giving your CA exams, and you had your final exams preparation, it was not just that you went ahead and you just studied few weeks before the exam or few days before the exam, and then you cleared those exams, right? So that is highly impractical. In many cases you might have planned for it 6 months ahead of time. You must have planned, okay, this is my exam which is going to happen in December, so I need to make sure that I finish all the chapters and all the modules by say August. Once I do that, I will get maybe 1 month for revision. So September month I'll revise, and then October I could give mock exams, and then November I would keep as a buffer for something if anything goes wrong, and then the final exams are in December. So you plan any event like an exam or important event in your life very carefully. So this budget is a very important corporate event in any company. It is one of the most important events in any organization. So this event is when the final approval of the budget happens. Okay, so this is the event which is the final board review and approval of the budget, which happens at the end of the year. Most likely in many companies, if your financial year is Jan to December, it would happen in December. Okay, so this is your exam or the board exam that the company needs to prepare for, and it cannot just suddenly get up in 1st of December or second week of December and start preparing for it, right? So because it's an important event, it requires that rigor and preparation, and which starts like you do start your preparation for your CA exams or your board exams much in advance. Okay, so I'll just quickly bring this up. So most companies start this preparation 2 to 3 months ahead of time. So this planning stage that we talked about, say for example, December is your board review or approval for the budget. You would start the planning stage, which is what we are discussing right now, the budget templates, guidelines, budget calendar, all of this will be done maybe in August. Okay. And then in the next month, you would be doing the next phases of the budget, which is execution and consolidation and reviews. So say for example, in once the budget calendar is ready and the guidelines are ready, you would start preparing the budget templates, and you would then distribute those templates to the different teams that are required to provide the inputs. They would not be sending you the templates immediately on the same day. They might need 2 to 3 weeks, or in some cases more time, to be able to gather all the inputs and then send it back to you. So they will put together the templates and then send it back to you maybe in a few weeks time. Okay. Now once the department templates are collected, So everybody has submitted the templates. Then FP&A team will start reviewing those inputs. Okay, and they will not just take the inputs as at face value. They will review those inputs. They would go through the assumptions. They would have discussions, meetings, understanding those assumptions. What are the rationale or logic behind those assumptions? Are they making sense? Are they consistent of what they were doing in the previous years? If they are way off, then you would maybe ask them reasons why they are way off. If you are not convinced, you may also ask them to change it based on whatever discussions that happened. So it's not that there's just that the templates are received and then you start consolidating them. You have to review each and every input and then make sure that everything is making sense. You have to assume that when you go to the CFO will ask you a lot of questions. So you should be in a position to own the numbers and understand everything that you have collected and consolidated, so that when somebody else is reviewing it, you should be in a position to answer it independently without the need to reaching out to the business teams. Okay, so you have to make sure that you review all the inputs thoroughly, carefully, understand what is happening, make sure that everything is logical, you have the right assumptions and the reasons for all the inputs. And then once you do that, you can start consolidating everything. And in many cases, consolidation happens using tools. You just upload the templates in the tool and the consolidation can happen inside the software. In many cases, Excel is used, so you would then need to create a consolidation template in Excel, which is basically A plus B plus C. If you have three departments, you add up all the three together and then create a consolidated version. Once the consolidated version is ready, again that will be reviewed by the different people in the company. It might be reviewed by CFO, it might be reviewed by business heads, it might be reviewed by regional heads, it might be reviewed by country heads, depending on how your organization is set up. So a lot of reviews happen once the consolidated budget is ready, and after every all those reviews are done, the CEO will finally review it, and then once the CEO reviews it, it will go to the board review and approval. At every review, there might be some changes that might be recommended based on the review, and you might have to make all those changes in the next version of the budget. That is why you typically have 50 different versions. You start with version 1, and by the time from August you get to November, you have like version 25, version 28, version 29. It is because that after every review, some or the other changes might happen based on the discussions. Okay, so this is the entire budget cycle that I wanted to cover in today's session. So you saw all these stages, right? You saw the planning stage, which includes your budget guidelines and the budget calendar. You saw the execution phase, which is your templates creation, template sharing. You will have meetings and discussions. Sometimes you will also have to train the different teams. They may not be familiar with the template. They might be new to the company, and sometimes they may be working in the company for the last 10 years, and then you don't have to do anything. You just have to send the templates and they would know what is to be done because they've been doing that for a while. Okay, so some people might be like that in the company, some people might be very new. So if they are new, we'll also have to train those people how to read the templates and update the templates. Okay, once you get all the all the templates, you have to review them thoroughly, understand what is happening, then consolidate. Okay, so that is a consolidation and review phase where you consolidate all the templates. It could be via tool or it could be in Excel. Get it reviewed. Typically, review happens at multiple levels. You will get it reviewed from the CEO. Before the CEO, it will be reviewed by regional heads, country heads, department heads, CFO, and finally the review happens with the CEO. And once the CEO review happens, you can take it to the board, and most likely in the board approval or the board review, they might ask you certain questions, ask you what are your assumptions, what are the reasons behind those, and most likely the board will adopt the budget. And once that is done, you can use that as a guideline, or a lot of people, a lot of what that budget will, once it is finalized, it will act as a guideline for a lot of people in the company, and even for setting incentives and bonuses. So a lot of incentives, compensation will depend on the teams achieving the budget or the target numbers. Okay, so it's a very important document. A lot of incentives, compensation targets are based on the targets that are set in the budget. I'll take a quick pause, see if there are any questions, and I'll also look at the chat box. Okay, so I am going back to the chat box. There's a question from Asanga. Most of the cases, we didn't get adequate staff as per the budget. So why can't we brought forward that or carry forward that? Okay. So it's something very specific, right? It's very specific to your company. So if you've not got the resources as per the budget, then that's a separate topic. You have to discuss that why it did not happen. And in that case, you might be allowed to carry forward if you are able to convince the budget owner or whoever is owning that budget. Okay. So you say that carry forward to the next quarter is allowed for budget. What about the use of budget in one quarter? Can we? So I'm not saying it is allowed or not allowed, right? You have to decide in the beginning what is the rule. Can decide with the, and all this will be decided by the CEO and the CFO. You can speak to the CEO and the CFO. You ask the CEO and the CEO, do you want to allow teams to carry forward the budget? And the CEO will tell you, no, I don't want to allow carry forward. I want the money back. I'll decide what to do with it. Okay, so it's not up to you. You have to ask the CEO, CFO what they want to do. And sometimes the CEO will tell you, okay, allow them to carry forward for the next quarter, but after 2 quarters, take it back. Don't give it for consecutive 2 quarters. So let them use the unused budget for maybe one quarter, but after 6 months are over, you take all the budgets back and we will reallocate it and we will decide what to do with that unutilized money. Okay, so it's not up to you, it is up to the CEO, CFO. What you have to do is you have to let the business teams know in advance what is the rule, and the rule will be decided by the owner of the company or the board of the company or the CEO of the company. Is it possible? Can we have this presentation file for later? Surely. So this will be shared with you. Also, the recording will be shared with you. So already there might be a version of the recording on our YouTube channel. So the entire presentation, the recording will be shared with you. Okay, so that brings us to the end of the planning, execution, consolidation stage. So what we will do now is I'll quickly share with you example of a budget template so that you get an idea of how the budget looks like in real life. Again, I'll quickly mention this is not going to be the same in all the companies. It is going to be different for different industries. It is going to be different for different companies within the same industries because every company is set up differently. So before I share the example, I'll give you quick background about the company also so that you understand what the company does. Okay. Is my Excel file visible?
Yes, Asif.
It will. Okay. Okay. So this organization is a FMCG, food and beverages, or what do you call, IC manufacturing company. Okay. So this is the background of the company. It is a manufacturing company which manufactures ice creams in different flavors. Okay. So it's a product based company. It's not a service based company. Okay. Now, when you have to budget or you have to create the sales budget for this company, typically you have to identify the drivers first. Okay, so first step is that you identify the drivers. What are the key drivers that will drive the revenue of the company? Okay, and we are preparing the revenue budget. Okay, in most product based companies, your drivers will be your volume or the number of units produced or number of units sold. That will be one driver, and the average revenue per unit or the sales price will be the second driver. Okay, once you have the revenue, so for example, for you to be able to budget the revenue, you need the two drivers. One is the sales price per unit and the sales volume for the next financial year. Okay, once you have this, you should be able to multiply that and get to the revenue number. Right? There might be other drivers like discounts and all, but these are the main two drivers, which is the volume and the pricing. Okay, so what is happening in this example is that there is a separate sheet for pricing. So you've decided what is going to be the pricing for each and every product in the company. Okay, what was the previous year pricing and what is going to be the pricing for the next financial year and what are the discounts you are going to give to different customers. Okay, so that is there on one sheet. So this is one separate sheet, which is 1.1, and then you send this template, which is the sales and volume template, to different teams in the company. Okay, so this is how the template looks like. It has different fields or different dimensions in the template, and this is a blank version of the template. So they have to fill and send this back to you. The different. So what I would do is I would send this template to different sales heads or sales manager, and they will give me the inputs for their particular teams. And say there are 20 different teams in the organization, all 20 teams will fill up the template, and then I'll collect the information, review it, and consolidate it to get the overall volume information, and then I'll multiply the volume with the price to get to the revenues. That is the process. Now let's see how the completed sales and volume this template looks like. So now what has happened is all the different teams have populated the information. So for example, there are 7 different sales directors in the company. Okay, so I'll send one template like this to different sales directors. So for example, Ajay is one of the sales head in the company. I'll send this template to Ajay and ask Ajay to work with his team. Okay, Ajay has a sales team of maybe 5 people. Okay, so he'll work with his team, 5 people team, and then he'll fill up the template for me and send it back to me. So let's take a look at what is there in one of the templates that I sent to one of the sales directors. Okay, so first is the channel. Which channel are they operating in? What are the products that they are selling? What are the flavors in this case? What are the ice cream flavors they are selling? Who are their customers? Okay, what is the discount if they are offering any discount to them? Sales director is filling up the template. Okay, what I request you, don't unmute yourself unless you have a question because there might be background noise. Okay, all right. So you have these different dimensions that you collect or different fields that you collect. So for example, is this a new product or is it an existing product? So all of these are existing products. So you say these are existing products, and then there is one new product here. Okay, so this is a new product, meaning it was not there in the previous year. Is this a new customer? Okay, if it is a new customer, you say it's a new customer. If it is an existing customer, you say it's an existing customer. Okay, is the contract already done or is it still yet to be negotiated or yet to be contracted? That could be another field. And then you will ask them to populate, or you are giving them the template to populate the volumes or the number of, in this case, number of boxes or cases for the ice creams that every client will order for each of these products and each of these flavors, and they will update this. You are giving them the previous actual numbers, so what they had ordered last year, so as a reference. Okay, and based on this actual numbers, they could look at the actual numbers and they can update the budget, or they can update the forecast what they think will be for next year and send it back to you. Once you get the volume numbers, you can multiply that with the pricing numbers that you have here, okay, that you've already decided, and then you can come up with the sales or the revenue budget number for the entire organization. Okay, now what typically will happen in many cases when Ajay gets this template, he will call his team members. Say 5 people are there in the team. Okay, let's assume three member team is there, and each of the member is managing one of the stores. So say one person is managing the Mumbai store, person is managing the Burger King, and then other person is managing the Delhi store. Okay, so Ajay as a sales head will go to each and every sales manager. Say he goes to the person who is managing the Burger King, and he'll ask him, okay, you had ordered, right? The Burger King store had ordered 255 boxes last year. What do you think they will order next year? Okay, so whoever the salesperson is under Ajay for the Burger King, he'll go to the Burger King store. He'll reach out to his customer point of contact or relationship person at Burger King, and he'll ask him, okay, last year you ordered 255 boxes. What do you think that you will order this year? And the customer relationship person will say, I think we are going to order more this year. So you can consider double the orders from previous year, but that will happen after July. So first 6 months you consider same volume of orders, and from July we are going to expand our store into bigger store, or we are going to add one more store nearby. Okay, so we might need twice the amount of ice creams that we were. So based on these discussions, the Ajay sales manager will have the most accurate or the most best information that will help you update the budget for the next year. Okay, and this will happen for each and every team. And sometimes there will be no point of contact. In that case, then Ajay sales manager has to make a estimated guess or a reasonable estimate that needs to be made if there are no external data points. Okay, once all the sales director has compiled the template, they will send it back. FP&A team will consolidate it together and put together the revenue number for the company. Okay, so that is how the, well, I mean, that is, again, I'll just briefly mention that it is an example. It will be looking very different in a service-based company. It will be looking very different in a SaaS company. It will look very different in a oil and gas company. So these templates are just giving you some reference of how you can build it for your company, but you will have to create it separately for different companies or even different companies in the same industry. So it will depend on how your business is structured also. So just
Okay.
like you saw the revenue budget, just like we saw example of revenue budget, you have to prepare budgets for different parts of the organization. In a manufacturing company, like we just saw, it will be production budget, inventory budget, materials budget, labor budget, manufacturing overhead budget. All of this together, the production and the direct material together will form your cost of goods sold. Okay, and then there will be other budgets like the sales and marketing budget, your administration budget, R&D budget. CapEx budget. So once you prepare all of these budgets individually with inputs from the different teams, then you will be able to put together a consolidated budget for the company. So this is how the budgeting process looks like in most companies. And we cover all of this in our programs, be it the 4-week FP&A masterclass or the 6-month in-depth CGFPA certified global FP&A professional certification, which Dhawal will be talking about in a few minutes.
Fabulous. So the end outcome, as you can imagine, looks pretty much like a P&L statement or an income statement where you have your different revenues, costs, and your operating profit. So that is the end outcome, and then it gets approved by the board. It gets uploaded in the system, depending on the planning tool, the ERP that your company is using. So now that you have some understanding about the budget, so let me give you some brief about what critical skill sets CFOs are looking for today, right? And we have spoken to dozens of CFOs, and they are looking for 5 core skill sets in their finance teams today, especially with accounting and taxes getting automated. So one is the core concepts of FP&A, right? Budgeting, forecasting, management reporting. All of these things are the core concepts of FP&A that CFOs are looking for. Financial modeling, not just in terms of specific to FP&A, like for example, scenario planning, sensitivity analysis, revenue models, all of that is financial modeling. Then data storytelling. It's not only important how you analyze the data, but it's equally important how you present this data to the cross-functional team members, because they don't understand 10,000 lines of Excel sheets like how we do, right? Business partnering is all about your business acumen. How do you build relationship with the various cross-functional teams so that you are able to guide them, coach them to take some prudent financial decisions? And then, of course, leveraging technology and the AI developments that are happening, how you can leverage them in your role, whether it is automation or even augmenting a certain aspect of your budget as well. So how you leverage technology becomes super critical. So these are the 5 core skill sets that CFOs are looking for today in their finance function. And most likely, if you want to progress in your finance career, or if you're aiming for that senior role at some point in time in your career, then you'll have to start developing your understanding about these 5 skill sets. So what we have done at FP&A Professionals Institute is that we have come, again, this is one of our own internal surveys. So it says 79% of the CFOs say that it is generally difficult to find the right. So there's a lot of demand for FP&A, but there are not enough FP&A professionals out there who understand the core FP&A bits of it. So that's why what we have done at FPI is we have come up with our own flagship program, which is called the CGFPA program. It has been in existence since over the last 1 year, already completed 3 successful cohorts. The 4th cohort has just started. The CGFPA Certified Global FP&A Professional Program, it's a certification. The curriculum is built by CFOs and FP&A practitioners. It has 10 core modules, which we'll talk about it in a while. In everything through experiential sessions. So we don't necessarily talk about theory, but everything is about real life examples, case studies, group discussions, simulations. You're part of a global alumni network. A CGFPA program has been taken by students from more than 25 plus countries. You also get sessions with your personalized career coach, placement support, not a guarantee, but a placement support in the sense that reviewing your LinkedIn profile, your resume, any job support, interview preparations, mock interviews. Also doing this, on an average, we post about 3 to 4 jobs a week on our alumni community as well. So we try and do everything in our power to kind of help you move into the FP&A roles as well. Access to monthly Q&A sessions where you can ask us questions directly, any queries that you might have. Not only us, but we also try and bring in external speakers and thought leaders around various industries, around various tools, around various topics, so that you get the latest what is happening in the FP&A world out there. And all of this happens through easy online access, either through live Zoom sessions or through recorded sessions, which are easily available on our best-in-class LMS, which is easy to navigate as well. So now that you have some understanding about the CGFPA program, so what we'll do is we'll now talk about the 10 core modules that are there as part of the CGFPA curriculum. I'll let Asif cover the first 5, and then I'll talk about the next 5.
Yes. So as we saw budgeting in brief in the last 30 minutes, the budgeting forecasting module will cover the entire budgeting process, the different methods of doing budgeting. We saw some of them today. The entire end-to-end budget cycle using real-life case study examples. So there are projects where you get data and we guide you step by step to create all of the budgets, the revenue budget, COGS budget, SG&A budget, R&D budget, CapEx budget, all of this step by step you have to prepare based on the guidance given by us. And at the end, you have to create a presentation that you are preparing a CFO as if you're presenting to the CFO, which is the budget presentation. Okay, so those are the types of activities and projects that we have in the budgeting and forecasting module. Management reporting, a very important topic for FP&A because this is you've seen in the monthly calendar, right? This is what you do in the first week of the month. In most cases, you prepare month-end reports. You do different reports required by different business teams. It could be sales reports, marketing reports, HR reports, different types of reports that are required for different teams. There are performance management frameworks that we cover, including the balance scorecards, KPIs, OKRs. Then there is variance analysis, profitability analysis, a lot of important concepts, and all of these are taught through case studies and real life examples. Financial modeling, Dhawal already talked about it. So it's not just financial modeling. It is very specifically for FP&A use cases, revenue models. How do you create cash flow forecast? How do you do scenario planning, sensitivity analysis, capital budgeting? Very specific to FP&A use cases. AI for finance FP&A is the latest module that we added, where we show you how to use latest AI tools, including tools like Microsoft Copilot, ChatGPT, to do the same things that you were earlier doing in Excel, and you can improve your productivity 2 times, 3 times just by using the AI tools, and that is what we cover in the AI FP&A.
Fabulous. So the other five modules are around data analytics. So one is you will end up dealing with a lot of data, whether it is operational data, financial data, so large chunks of data. So you need to know how do you navigate through that data. So that's why we cover the fundamentals of Power BI, Power Query, SQL. We don't claim to make you an expert in those topics, but at least we'll give you that head start that you're able to comfortably use Power BI, Power Query, and SQL. And then comes financial analysis. Financial analysis is not just about ratio analysis. It is a lot about internally how you are looking at the company in terms of productivity, horizontal analysis, vertical analysis, different types of metrics that CFOs use to track the performance of the company. And storytelling and presentations, right? What are some of the storytelling frameworks, best practices and visualizations? How effectively can you communicate your story to a non-finance team member so that he can easily understand the performance of the business and then take certain prudent financial decisions. Then comes strategy. As and when you get senior, you will notice that your senior management starts talking about strategic frameworks and strategic aspects where you are unable to kind of grasp them. So that's where we cover all the strategic frameworks, popular strategic frameworks, and how and also show you how FP&A has an overlap with these strategic frameworks. How you can understand some real life case studies and then contribute to these strategic decisions in your company as well. Then comes your business partnering. That's all about your business acumen, your ability to build various cross-functional relationships, how you can truly become a partner to the business and become a coach to the business. That is what business teams are expecting finance professionals to be today, right? So all in all, 10 solid modules that will cover everything that you need to be successful at FP&A. Don't think about just this as a course. It's more like a fast track, 20 years of Asif and my experience compressed into this 6 months program. So think about it this way, that it will at least save you a few years if you really want to learn FP&A from scratch, right? So that's how this program is built. The one premise that we followed while building this program is that, okay, if Asif and I have to hire an FP&A manager today, how would we train that person in the quickest possible time? So that's how we have built this module, 100% course, 100% practical aspects as well. Now, what is the eligibility for the CGFPA program? You need to have either a bachelor's degree or a global equivalent in finance, accounting, or business, or alternatively, you may have professional qualifications like CA, CPA, CMA, CIMA, ACCA, whatever, right? So we don't claim to be a substitute for your primary qualification, but in fact, we are a supplement for your primary qualification. We are also CPD accredited, so that you can claim your continuing credits in your academic qualifications or certifications as well. How will you be awarded the CGFPA certificate? There are two conditions. One is you need to attend the classes live online, at least 50% of the classes. Every Saturday, we meet for 2 hours. Typically, it's on Saturday evening, IST time, and we meet for 2 hours. And then you need to attend at least 50% of the classes live. Although if you miss a class, the recording will be provided. The second condition is that you need to submit your assignment or your capstone project within the stipulated deadline. All the guidance will be provided for how to do that. And then once you complete these two, you will be eligible for the final examination. The final examination is a multiple choice 2-hour question, 2-hour question paper. And once you attempt that, once you clear that examination with at least 50% passing marks, you will be awarded the CGFPA certificate from FP&A Professionals Institute. So that's how the process will be. Now, a valuable program like this, which is going to easily fast track your career by a couple of years, the ROI of this, I leave it to your imagination. But the fee investment in this program is $1,595. There is payment plan available. The duration is 6 months, where we meet every Saturday live for 2 hours. And apart from that, we expect at least for you to invest about 60 to 90 minutes of your own learning about the pre-reading materials that we give, about the case studies that we give you, or some homework and practice exercises that we give you, so that you can maximize the classroom time to discuss the core case studies and not spend on basic things like, what is the budget and all that. Those things are part of your pre-reading, and you can of course see that this is an executive program. So make sure that you are doing that justice. At least 3 to 4 hours of your weekly time commitment is required. We understand that all of you are busy executives, and this is designed for you to kind of pick up things seamlessly. And then the next start date is June 7th, 2025. So that is when the orientation happens for the next cohort, which is cohort 5. And then we start meeting every Saturday, 2 hours for the live sessions. The date that you need to remember right now is 10th of May 2025. That is when the first round of applications, or the early bird round of applications for cohort 5, are closing. Asif will share the brochure link and the application link in the chat box. Whether you decide to do the CGP or no, that's a secondary thing. So, but make sure that you at least complete your application so that team can review your eligibility, and they can come back to you with any early bird offers that we are planning to launch. And you will get to know that before 10th of May 2025. So make sure that you complete your applications before 10th of May 2025. Okay, don't just take our word for it. There have been tons and tons of testimonials. You can see a lot of them on our website. You can reach out to any of our students, and they'll give you the feedback. It's a highly practical course. And, one thing that excites Asif and me today is that we have put our full-time CFO and FP&A lead jobs to kind of start FP&A Professionals Institute. So one thing that motivates us today is when our students come back and say, hey, I was able to get this job because of this program, or I was able to get promoted, or I was able to execute something in my role. That gives us maximum satisfaction as teachers and coaches today. So you can reach out to any of our alumni, and they can tell you more about it. Okay, so 10th May 2025, that's the deadline for the early bird applications. You remember that. Thank you so much, everybody, for attending today's webinar. Hopefully, we will see you in one of our programs. Keep learning, keep growing. All the best. Have a great weekend.
Thank you so much. Thanks, everybody. Bye.